Hey guys, Mark42freeway.com, marltonpike.com. I'm on the Blackwood Clementon Road in Gloucester Township, and I want to talk to you about one of the top questions I hear and see at the Facebook page, and that is, why are they building so many car washes? Who's asking for all these car washes? Are cars dirtier in 2023 than they were 20 years ago? And the same thing with storage facilities. Why so many storage facilities? So I'm going to talk to you about that, and I chose this spot because right here we have a mod wash car wash being constructed. They're not open yet. Block and a half away, Take 5, a competing car wash company, went to the planning board in the fall to get approval. I believe they were denied. I haven't written about that. And then over in Mantua, an existing car wash, I think it's Cloud 10, they just got approved for a second one. Same street, same town, a mile and a half away. So obviously this is going to raise questions. Just general human nature. You're going to say, wait a minute, why do we have so many car washes coming up? Well, it's not really consumer demand. It's big finance. Private equity investors, real estate investment trusts are jumping into the car wash and storage facility space, and they are driving for more of these things to be built. There's many ways for them to make money. Hang with me, I'm going to try to explain it. All right, two facets I want to talk about, financial facets. The first thing is triple net leases. Now this is not specific to car washes. This is just a common option that commercial developers and businesses have to finance and pay for the construction, the building and the land in a way that basically can get them their money back so they can go on and build the next property. So that's a factor in car washes and storage facilities. The second aspect, which has really kicked in gear which has really kicked the car washes into gear, is a change in the car wash industry, which used to be sort of like a mom and pop. A family would build one or two car washes and they would just operate until they retired. Something changed in the car wash industry that has the interest of the big finance guys to say, hey, wait a minute, we're going to jump into this space, we're going to invest millions, and we're going to build more. All right, triple net leases. To explain that, I'm going to take a half step back. Say I wanted to open up my own business, Mark's Pizza Shop. I write about a lot of restaurants, and in my area there's a supermarket and a strip mall, and I see an empty spot near the supermarket, and I say, wow, there's a lot of foot traffic there. I'm going to build open my restaurant there. So what do I have to do there? I go to the building owner, and I make a deal to rent their space, $3,000 a month. But I'm going to own Mark's Pizza. I'm going to build out the pizza shop, put the signage up, buy all the equipment. I'm going to set my prices. I'm going to do the food. I mean, it's my business. And my point of bringing this up is you can understand there's two businesses here. There's the building, the landlord, and then Mark's Pizza, that would be me. Now consider a car wash like the one behind me, the mod wash going in. You're not going to go to that same shopping center and say, I'm going to run a car down the middle of your strip mall, right? No, it's a specialized building, needs a lot of space, so you're going to have to go out and buy a piece of land. You're going to have to hire people to build this thing. It's a big multi-million-dollar investment. And along the way, over the decades, finance people started realizing, well, wait a minute, just because this car wash is one property with one building on it and one business operating it, why is it any different than that strip mall? Just because the strip mall has 12 units there that they're renting out, just because this is one, it doesn't need to be any different. So they started doing this model called triple net lease, which can basically turn single buildings into a lease thing. So if I built this car wash, and I'm just going to pick a number for $4 million, I could, when it's done, offer to sell the building and the land to investors, basically making myself a tenant. So I'm going to sell the building, but I'm going to now become a tenant. So I'm going to have to pay rent. That's very important. I got to pay rent. So I got to make enough money from the property to pay the rent and then make a profit. On the investor side, I'm going to talk about the two sides of this equation, right? On the investor side, why would they buy this building? Well, not every dollar for big investors is like looking for the next Amazon to go from $10 to $3,000. Sometimes they just want to know some of their investments are going into a safe, consistent income. So when I build this car wash and I offer it up for sale, and by the way, there's people in the middle there. I don't know if they're real estate brokers or investment bankers, but they package this up in sort of like a prospectus. And you can go online right now and Google triple net leases and try Wawa. Wawa does this, or the developers of the Wawas do this, and you'll find the written prospectus. And they say to investors, look, you buy this thing for $4 million. I think I keep changing the numbers. You're going to get a 20-year tenant. The tenant's going to sign a lease for 20 years. And you do the math this way, you're going to earn 6% a year guaranteed for the next 20 years. And a lot of investors are, even professional sports players are getting into this. You could search that too, there's articles in that. Just to get that consistent income. I'm sure on that side too, there's tax benefits to that. Now, for me as the guy who built this building and I'm now going to be the operator, why would I do it? Well, guys, I said the word sell. I'm gonna get my money back. And in fact, in a lot of these cases, I think you can even get more of your money back. Like say it costs $3 million to actually build this. Once it's open and operating and there's a tenant there, the thing actually could be worth more money. So you're getting your money back and maybe even more. You have a lot of options there, right? You can then take that money and build another property. Or knowing that you have this model in place, you can get a big line of credit that just allows you to build 20 of these things, because the bank knows, all right, well, within 6 months, you're probably gonna turn around and sell this off and get your money back. There's just a lot of options there. Now, one thing that's different with triple net lease than say my pizza shop model. In the pizza shop model, the landlord is fully responsible for all the maintenance and repair of the building. If the electricity goes out in the unit, the landscaping outside, they have to do all that. The difference with the triple net leasing, the financial aspects are separated from sort of the building operating. So in this case, if Wawa's building is sold off as a triple net lease deal, Wawa is still retaining the responsibility to upkeep the building, to do the landscape, to do the repairs. Now the reason why they do this in the triple net lease deals is because it keeps it as just a financial transaction for the investor. You literally could be a billionaire in Japan and jump into America and buy these triple net lease deals and not have to worry about hiring a maintenance staff to fix plumbing issues at the local auto parts store because you bought it as a triple net lease deal. So it makes it even more attractive for investors. It's more of a paper financial transaction. They don't worry about the operating cost. So you can start to understand already how, whether it's a storage facility, a car wash, auto parts store, they can just keep cranking these things out, building, and have the option of selling off the building and the land in a triple net lease deal, get their money back and move on down the line, or again, get that sort of big line of credit, just knowing they have that option. And even as these things are built too, they can turn around and sell. The business itself is still worth something. The operating business is worth a huge amount of money. So that's even another vehicle down the road that they could sell. Now, the second thing I want to talk about which is more specific to car washes, is, historically, as I mentioned, this was like a mom and pop kind of business. I think, a family would build up one or two and they would own them and operate them until they retired. And then think about it. It costs you $4 million to build this thing, and it opens in Boston in January when it's cold and snowy. And for the first 3 months, nobody washes their car, but you got mortgage and bills to pay. And you got high operating costs. You got 10, 20 employees to run the thing. There was a classic movie from the 70s called Car Wash, where the opening scene is a real popular song of the era from Rose Royce, I think her name was, where it goes through the car wash and all the employees are dancing and singing. And you just see there's like 15 people there. So it was just expensive. It cost a lot of money in the build. You had high employee costs. You had high risk of just money not coming in. So big investors were not interested in the car wash industry. So two things changed. And in fact, the Wall Street Journal jumped all over this. The one facet I'm going to open up with, they did a really wonderful podcast of, why is private equity interested in my car wash? So the first aspect that changes the membership model. So consider, how many of us have had a gym membership, Planet Fitness? Planet Fitness has not changed their price in 30 years of that $10, and there's a reason. Because people sign up, they stop going to the gym, but it's only $10. You just keep paying it. And you think you're going to go to the gym next month, and then 5 years goes by, and they've just made $500 off you. So along the way in the car wash industry, someone introduced the membership model. So, and they're finding out that like 60%, say, of the revenue streams are coming from the membership model. It's a great deal, actually. If you can wash your car 5 times a month if you want. But here's the kicker: when those cold winter months come in the Northeast and in the Midwest, the investors are still getting the money. The car operators still getting their money. They're still taking the money from your account. You got the car washes with the membership model. The second thing that's changed in the car wash model is just advancement in technology. I mentioned the movie Car Wash with like 12, 15 employees there. Today, you really only need 2 people to run a car wash. And one of them's just sitting at the front kiosk trying to sell you a membership plan. So the operating costs for car washes have dropped drastically. So you factor in a constant revenue stream, very low cost. These car washes are turning like a 50% profit. Compare that to a supermarket who says they're getting like a 2 or 3% profit on food. Compare that to, think of the challenges too of just like running something like a Wawa, all the food preparation, inventory. How many different inventory items does a car wash have? Like it just seems easy to operate. So you got membership models, you got low operating costs now, high profit margins, and they have the option of getting out of the deal, whether, getting their money back, whether it's, triple net leases or selling these things off. At this point, private equity investors, which are people that like directly buy into businesses, they woke up and they said, wait a minute, we need to be in this space. What started out happening is they started buying up all the little mom and pop operators. One of the websites I looked at, they literally, you go to the website, there's like 30 logos at the bottom of it because it's all the different companies they bought out. But it got to the point where they started running out of options of buying the places. And they said, well, what do we do next? So guys, you heard all the sales I just said about all the financial options there. They started building them. They started popping, we're gonna build these things all over the place. And in a lot of ways, it doesn't matter that there's 3 car washes already on the same road. Will they make less money sharing it with their competitors? Sure, but you know what? Because of the low operating cost, because of the high profit margins, they're still gonna make their money, and they're gonna have all, like when they build a portfolio of these things, 100 of them, and later on, maybe they wanna get out of the deal and they wanna sell it to someone and make a huge profit, it doesn't matter that there's 2 close to each other. Like, it's more the bigger deal. And similar things are happening in the storage facility. So how many people have like gotten storage facility space for like, oh, I need it for 6 months while I move to just clean the house out because we're gonna put it up for sale. And then like 6 years later, you're still paying for the storage facility. Consistent membership money. So they can keep cranking these storage facilities and these car washes out, making profit, and again, have all these options to get out of the deal. If I didn't say this, the private equity are folks that invest directly in the business. Real Estate Investment Trust is a stock market company. Like the Cherry Hill Mall and the Morristown Mall are owned by a real estate investment trust. It's a company that raised money through the stock market, and once they have their hundreds of millions, they can buy properties and things. So the real estate investment guys are getting interested in the storage facility units. In fact, the largest one, or one of the largest ones, is right in Malvern, PA. They own 1,200 facilities, and they did a deal in like 2020 for like $400 million buying up facilities. So you got these 2 assets, all these different people coming in, because again, the storage facilities are of a similar model. The third layer that's coming into this, all the people that are building these facilities, the developers, consider their scenario. They're very good at building car washes, storage facilities, gyms, pharmacies, but they're sitting back waiting for the phone to ring. And in fact, one of the big developers, getting back to ModWash, Hutton, he even said this very honestly in an interview. It's like, we're sitting back waiting for the phone to ring for someone to call us to build, but then we're competing against 4 other really talented general contractors for the same business. And she started realizing, in specific to ModWash, wait a minute, this business doesn't look so hard. I've built several of these things, many of these things. Low operating costs, low inventory. Like, how many different items do you need for a car wash? I need 2 employees. Why don't I just hire an executive who knows the industry, and I'll start my own car wash? So ModWash was actually started by Hutton, which is a general contractor out of the South. And they jumped in and said, look, we're gonna build 100 of these things and we're gonna crank them out. She says, wait a minute, simply, why do I need to sit back and wait for my phone to ring? I can be in control of my own destiny. And people get confused with this on Facebook. Look, if you're a developer, you got employees, you got bills to pay. Developers want to continue building things. So she positioned herself very smartly to be in the driver's seat to build her own car washes, to feed her own general contracting business. But everything I just said up to this point, whether it's triple net leasing the buildings off, building, once they build 100 of these, and they want to have 100 of them in like 5 years, and it seems like they're going to do it, think of the options they have. Heck, they could turn ModWash into a private company on the stock market. They could sell it to one of those other larger real estate investment trusts. There's just so many options. I think to this point, they still do own all their facilities. I'm sure they got some huge line of credit to do this, but it's a really smart move on their part. Anyway, guys, mark42freeway.com. I hope that's understandable. I hope my audio worked. I've been having some problems with it. I've done this video 1,000 times. Please subscribe to my Facebook page, subscribe to the YouTube channel here, and click yes for notifications. Happy New Year.